Good morning and welcome to the early bird. And I'm doing this on the Saturday, of course, and there's the Sunday meeting, the European Economic Summit on Sunday, and so we really need to wait for some figures to come out on that, which we'll see pretty much show up in the Dow futures and then the currencies. So we will revisit this report on early on Monday morning, and also the bonds are being cut as well. So that should affect the downside that should give downside to stocks on the opening. That's why the Dow futures is really important to see how that pans out, and also to see what happens at the summit there as well. So all that will come into play on the Monday morning on the Dow. So, but in terms of the wave count, we're still looking for further upside. This is the German market here, the DAX. So we're still the D30 here. So we're still looking for this to push up through here, and that's pretty much the same with all markets out there actually. So we can pretty much take that theme there. And as you know, on Friday with the early bird report, we were looking at being long in the SPY, the Euro, and looking for support on the 11,500 for the Dow Jones here. So this is our 11,500 here, our medium level. And we're just waiting for support to come in off that for another push higher. We had these targets in here at 11. These two targets here, the 11,772 there. This is still pushing higher into the 11,800. So 11,800 is the minor trading level there. And in the index itself, the 61.8 retracement level from memory is pretty much up here. So we're looking at this particular wave count here at the moment. So what we'll do with this particular wave count here, we'll look at it in a couple of ways. I might just go back to this other chart here just for a moment. So this particular correction that we were seeing unwind here at the medium level through here can be seen in two different ways. It can be seen both in corrective patterns, and they'll both be pushing to the upside. But the important aspect here, I guess, is what we need to track now is we need to track this to the upside up through here, and we need to look at it in two ways. So the first logical way of looking at this would be the 5-wave structure from this point here, pushing up through here, and you can see the strong third wave in the middle here, and obviously this would be the first wave here. So this would be wave 1, wave 2 across to here. There'll be 5 little waves in here, and in fact I think that 5 little waves is actually into here. So this is pretty much up for 1 and back for 2, up for 3, 4 and 5, moving up there further. So there's still more to play out there. So that would be the 1 5-wave structure looking to go to the upside there, and that could be the end when we get it up there. The other scenario that we need to keep into play as well is from this point here, and that would be up for 1 here and back for 2 here, and this would just be the third wave moving up through here. So we'd have a much larger 5-wave pattern up through there, which would take us up above the 12,000 up there. So that's something that we need to consider. We need to consider this in terms of looking at the ASX 200. So if you can just sort of envisage this up for 1 and back for 2 here, then wave 3 here would need to push up above the 11.9 here just to be sort of long enough for this here, because normally wave 1 would be one of the shorter waves. If we get the extension in wave 3, which we probably will, then wave 1 and wave 5 over here will be the same length as well. So we'll be looking above the 12,000 for that. In terms of trading, then we need to use the intraday wave counts and also the levels as well. So the 11,800 is a profit-taking number, so we could see it hit there. The cut in the bonds would create lower prices through here, but at the same time we've got the summit happening on the Sunday there. So you know, what comes out of that, how much money they throw at, all those sort of things, it may already be priced in. So it's really about meeting expectations, I guess. So it's not really about the event itself. We just need to see that play out there, and that's the same across the other markets as well. This is the US 30, the S&P 500 here, and that's there just counting this little wave structure out further through here. So up here, we were looking at being long here on the Friday, and if you're still long, then that's fine. What we can expect there is a reaction at the midpoint here, the 1250 there, and expect a wave 3 to wave 4 to occur across this level here in terms of a 3-wave pattern, a 5-3-5 pattern. It's an ABC, and then a push up, and we'll be looking at 1272 up there on that level there. So that's something that we can aim for there. Once again, I'm just counting this little wave structure up through here, but we need to be mindful and actually consider, I've got this laid out here as a corrective pattern, and that's the pattern that we've been looking at on the S&P 500 on our Elliott wave charts, so you can go there to see that. But I also want to consider this here pretty much up for wave 1 here and back for wave 2 here, and then this is a 3rd wave going up here. So we may have a bigger move up through there, and the driving of this, of course, would be the US earnings. And I'm not a full book on the US earnings, but I think next week is actually quite a big week for earnings. But I need to double check that. We'll just keep that in mind, because that would be the driver coming out of that. We just got to get past the haircut on the bonds and the summit. So we'll see. But we understood that this would be running up to the summit, and that's why we were long on these ones. There, we couldn't really be long on our local stock market as such, because we just didn't see the volume come in on Friday, and we just didn't really want to be exposed to what happens from the Sunday, from the night on the Dow futures. So it was sort of better to step away on those sort of cases there. And I did hint at a few stocks on the ASX 200 there, but I didn't follow through with them because of no volume coming in. So there's no support there. UK markets the same. We'll be looking at 5600 on the upside up there. Bit of a GAN number, this one here. It seems to kick in a little bit like the 72, but it's not as strong as that. But if you're trading penny stocks at 56 cents or 5,600, $56, you'll see what sort of impact it has there. In terms of trading this up, here's the same pattern as the S&P 500. It's just that it's lagging down here as well. It hasn't taken out this high here, and that brings us to our market as well, the ASX 200 or the SPY, whatever. It's also lagging even further behind its old highs as well. It's at 4,200, and the 4,300 is a bit higher up. So yeah, so there is a drag there, which is basically equals weakness, which is weakness from the Asian side here. As you see, the Shanghai and the Shenzhen really sort of still sort of cranking to the downside there. So, but anyway, we will be counting this little 5-wave structure up through here to go up it further. It's going to have troubles at these old highs, of course, and also 5 as well, 5,500. Is 5 is the second strongest number in the market, and you've got 2 of them there, and you can see it coming into play there. Yes, it will have problems through here. Yes, it can spike from the summit outcome as well, so it just could pop straight up, or it could not meet expectations and drag over as well. So we just really need to get past that news event, really, right across all markets there. Same with the SPY as well. We were looking, this is the 30-minute chart here on the SPY. We were looking to go long on the midpoint here. That's been the case, so we lift the stop up, and we can lift the stop up to here now. And this is the wave structure that we're looking at through here. So it's up for 1 in brackets, back for 2. A little sort of A, B, C there. 3. If you see a 3-wave pattern after an up movement like that, you know that these highs are going to be taken out there. So we've got up for 1, back for 2, and we've got up for 3, we've got back for 4, and we've got up for 5. 5 should take out the top here, but be a bit of a struggle in here first. But it should sort of meet within subgroup 1 here, 10, 20, and 30. That's job to hold the price to the closest largest number, the 4,200 there. So we should see the 5th wave come in here, which will be the top of the 3rd. Consolidation for the 4th, and a correction across the 4,200 here, and then a push up through there. If the extension is in wave 3 here, like we're seeing, then we can expect wave 5 up here to be about the same length as this one here. So we're not expecting a lot to the upside there, but we'll see how we go. We'll be looking back up to, of course, the 72 number here, the 272, but it's still we've still got to get past this whole European mess there. But there are still, even though earnings are good, there's still plenty of skeletons in closets there, and Bank of America seems to be the one of the main cases there, and that looks like it's going to go into to default. You can see that Citigroup, who basically runs out of piling some of their bad notes into that company there, so they'll be bailed out by taxpayers, which will create more hassle, I guess. So yeah, so that's the smaller pattern. So that little ABC, we're just looking, that little 1, 2, 3, 4, 5, we're looking through there. That's it here. So we've got up for 1 and back for 2. This is a 2-hour chart. The last one was a 30-minute chart. So we can see this is, this is building to the upside. Now, if this is a corrective pattern here, like we're looking at here, would be an ABC, so it would be a 5, 3, 5 structure, and we had been counting this down for 1, 2, 3, 4, 5 as a C wave. So as this pushes up through here, if it takes out this top here, then it creates this as a 3-wave structure. So we can only assume that it is a 3-wave structure at this stage here. It still could be down for 1 and back for 2, down for 1 and back for 2. I doubt it, and would finish in here and then roll over from there. That's a possibility. We just got to sort of go with the bias, and the bias is sort of to the upside, but any new long positions, you really want support on here on the 4200 here, and then once we've got a corrective pattern through here, and shouldn't come back much lower than the subgroup 2 area in here, but once we've got that pushed up there, little ABC here, then we'll see another 5th wave up through here. That will give us 5 waves up there, the 1, 2, 3, 4 and 5 up to there. Then we will see another A, B and C across here as well at that point there. So yeah, and this is also sluggish as well. I mean, it's still below these tops here, so there's not a lot of movement there. We've seen we were running on this one here because of the bounce on major trading level 300 for copper, and the other base metals to go with that, and precious metals to follow that as well. So we're expecting that. We're getting it. It's not that strong, but it is displaying a decent impulse wave in terms of Elliott structure there. So we'll continue to run with that. I'm just saying that it's going to be damn choppy around this little area here. But if we do get 5 waves here, as I just mentioned, then we'll get a pullback, and then we'll get another 5 up. So essentially, when we get an A, B, C correction like this here, then we'll take out that top there, a little bit like this one here. We've got the A, B, and C here, and then we'll be looking to take out that high there. So that's something we'll be looking for there. That high being taken out there would be looking at 4,350 plus there on this major this structure moving up here. So we can essentially turn long, and we'll be discussing that a bit further there. Now I'm going to go to the copper market first as a driver. We'd seen this coming down through here, and we knew that we're going to get a bounce off the 3 here, and we're getting that now, and that's fine. And we're looking at 5-wave structure moving up here. So once again, we could actually be taking this top out here. So we'll see how we go with it, but it does appear that we've got 1, 2, 3, 4, and then this 5th wave here is still unfolding. It's extending in here. But what could happen here is that this can be up for 1 and back for 2 here, yeah, and we could put a little bracket on that one, a little bracket here to make it a different degree of wave structure, and then up for 1, back for 2, and up for 3. Because what we're actually looking at here in these impulse waves that are moving up through here, we're seeing it expand, aren't we? We're seeing it's actually growing. So just as the tree grows, it's growing and it's expanding, and the volume there would be to suit that. So we'll be looking for 5 waves up, and then a pullback, and then further up. So it could certainly take these highs out here. So we'll have to reassess this the larger correction that's driving this pattern here. But I just want to get through the Monday first to see if this actually fails from here, which it should do anyway once it gets in this little structure that it's pushing up through here. I can go in there and count those, but I can say to you that that's little 3rd there, be a little 4th and a 5th up to this little area here, and then back to here. That little high there is the 61.8 retracement level, pretty much spot on there that traders would have been looking at, and that's why it's been hit there, but there's still a bit more to go to that. So we'll be looking at that while this is doing that, with the possibility of even moving higher based on all the impulse waves that we're looking at across the market. We'll be seeing Gold do the same as well. We've been sort of short in being mindfully. We follow the last little 5 waves up here to get the end here. We understood what's going on down here. We were looking for the shorts here, adding under here for the shorts. We thought we'd get further down through here, but I have to be careful at this stage now because looking at the structures of this structure here and on the copper and so forth is that it could push much higher and take out these highs here. Because this move down through here, as you see, we've had it labeled as wave 1 or an A wave to B, and so it's starting to really shape up as a B C structure here. So we could push much higher. So the idea was to, when we seen copper at the 300 there, was to cover any short positions we got here, and we'll allow this to play out. Now this can fail through here. It does appear that there's more upside here in terms of this market moving up through here in terms of 1, 2 for 1 degree. The next degree smaller than that in the third wave would be 1, 2, 3, 4, and 5 to here. Then we'll get 4 across here, 5 to go up to the 61.8 retracement level, which is the 1660 there. 618 from there to there. If you're going to go long to here, then the stop really needs to go under this wave to here. So that's also a significant little area there, because when you think about it, that's the Fibonacci number of 1618 here. So critical. So put the stop at 1617 there should be, or even 13 would even be better still, and that would at least try and take some profit at this number within subgroup 2 here. But we're looking for support on here now, so let's just see how that goes. Let's allow that to play out, but be mindful that we will switch to long if we do have support on this 1650 there. Yeah, and silver's the same as well, because silver was having that bounce off also major trading level 3 as well, as it's coming down through here, the same as copper off its 300. This is 3000. So until we're under this and locked under here as resistance, we can't really short that market there. Yes, we still do consider this a corrective pattern through here, because this has got the makings of a third wave down. So this would have to be a fourth wave through here. Fourth waves just get complicated. They seem like they can go on forever, but we'll keep still poking around at it to see what we've got there. But what we could see now is this A, B, C here that we had can just be the A wave, and then we've got a B wave, and then we've got 5 waves up for a C wave ending up here somewhere at the 34 Fibonacci number, and then rolling over. So that's something that we need to take into consideration as well. That would line up with stocks, with the Dow being much higher as well, but we'll see the Dow's got to get through the 11,808 profit-taking number. So in normal cases that would play out as a profit-taking number, but we may get that because of the cut in the bonds, but we'll see how the summit on Sunday night goes. Oil is sluggish. Hasn't really made a new high in following stock, so we still consider this is actually a corrective pattern here, or even to the downside, in down for 1 and back for 2, and coming down here further as well. So this has actually got a pattern in it that should bring it down further, which is a bit odd really, because with stock moving up, oil follows stock these days, so we can look at higher, but the 88 and the 90 are strong resistance levels through here, so let's just chill out here. But any weakness in the market, as I mentioned on Friday with this as well, because this was sluggish, then any weakness that we do see, then the energy sector would be one that we would be looking to short there, and we made a start with Woodside, so we may sort of get stopped out with a small profit there. We'll see what happens with that, but yeah. Okay, that's that. The flip side of all this, of course, is the currencies, and starting with the US dollar index here. Good for American manufacturing, seeing this sort of low dollar come in here. We were looking at this as being a third wave here and a ABC for the fourth wave here. We did understand that we could get some sort of triangle pattern sort of happening through here as a wave 4, because in Elliott terms, the wave 4 has the complicated corrections over the wave 2. If wave 2 is simple, then wave 4 is going to be complicated. So it does appear that we are impulsing down here now, but I still wouldn't rule out in terms of an A, a B, a C, a D, and an E, and then down further. But we'll run with this situation here. And what I mean by that is that we'll call wave 4 here, and we'll leave this door open here for also to be wave 1 down to here, and then an A and a B and a C for wave 2, because it never took out that top there. So that can be down for wave 1 and back for wave 2. And then we've got this impulse coming down in terms of 1, 2, 3. I think that 3 is actually part of this one here, but we'll call that 4 for the time being, and then down for 5 here, making a low under here. So this can continue to move down through here as we see the euro sort of stuck at 139, one of its old highs there, but we should see the euro also push higher to the 140 there. But of course, it could do spike any direction, after this summit Sunday thing. So it's just as Forrest Gump say, the box of chocolates on this particular case, because you just got so much news coming out in one hit. So it's going to be a bit of a dangerous affair there. But technically now, that wave 4 there and that wave 3, this wave 5 here, technically that's actually finished. That we could put a 5 in brackets here and have that done and dusted there on that little one there. So it's still, that's not much, the Elliott's not much sort of help to us at this stage, but the euro pattern does appear to be going higher, so we should see this go lower. We should see stocks go higher as well, in terms of their wave count as well. So all things being equal, we should see stocks and euro, AUD, all that to the upside. We should see this to the downside here. The euro here, we were looking at being long here as well, and that's sort of panning out. If you're still long, that's fine. Continue to be long. We'll be seeing the 140 as a retest there. Yes, it will struggle at the old highs here at 139. There's nothing sort of new about that, but this being a corrective pattern through here, we'll see this up for 1, back for 2. The third wave's moving up through there. So if we have a closer look at that there, probably a bit too close really at this stage, because we just don't know what's going to happen, but we're just watching this impulse to the upside up through here, so that's got more to go up through there. I guess that in all of this, what we look, everything being normal, and it's not, but once we do get past the spike that may occur, then what we want to do, we'll pick up the thread again, and we'll be looking for some sort of corrective pattern across the 139, unless it just gaps in one direction or something. What can you do? So but in normal cases, we'll be looking for a corrective pattern across the 139 here, and the subgroup 1, the 10, 20, and 30 will hold the price to the downside, and the subgroup 2 here will hold the price to the upside here into this. But we want to see a B, and a C across here, then get back up and support, and that's where you'd go long. So a 3-wave pattern like an A, B, and C here, then getting back up there, finding support, using 10, 20, and 30 to scale in on, and heading up to the 140 is what we'd be looking at there, and that would be in line with stock as well. Moving up further as well. The AUD, same thing as well. We were looking at going long from the midpoint here, and of course the 107.72 here is our game here, and still pushing up high there. This would be a retest of the closest number, which would be not the 104 but the 105. So we'll see how we go with that. But all traders would need to work the two types of patterns across the two trading levels patterns across the 104 there to move up high there. Now we've got this could really sort of push to the upside quite strongly, because I'm just labeling this in a slightly different way, but we can see this as wave 1, back for wave 2 of that degree. Then in a smaller degree, we've got wave 1 and wave 2 coming back to this point here. Yeah, then we've got the 1, the 2, the 3, the 4, and the 5. So that will make wave 3 in brackets up there further, and then we'll have wave 4 in brackets, wave 5 in brackets, and that wave 5 in brackets will be the top of the third wave. So there'll still be a 4th and a 5th after that. Now this particular pattern through here, it doesn't have to be counted like that either. This can be part of the corrective pattern that we were looking at before, in terms have a look on our charts anyway, on Elliott charts, you'll see the other way. But I just want to present this as well as a possibility, as a real possibility, and we'll see we'll see how that pans out. But we'll be working with two wave counts to the upside in a lot of the markets, and we'll be using the AUD and the copper market as leaders for some of the indice markets as well. So we should be able, out of all these markets, we should be able to find the right wave count. One will cancel one and work with the other one. So that will become apparent. But you can see this is impulsing nicely, making new highs to the upside there. This is just the smaller count here, and just sort of considering what will come out of this here is that from here we can see that we got 5 waves up through here. In reality, it's probably to there. Oh no, it'll be in there one. It'll be the 1, the 2 in there, the 3, the 4, and the 5, the ABC to here. And this will be the 3rd wave cranking up through here, so it can take us higher through here, and a 4th and 5th. So we're looking for 5 waves up into subgroup 1 up here, 10, 20, 30 in here, and then to be pulled back into the 1.4 there, and looking for an ABC correction across here, an A wave, a B wave, and a C wave. Essentially a 5, 3, 5 structure, and if it finds support back on the 104 after that, then we can go along from that point there. Of course, we've got these meetings, economic meetings coming out of Europe, and the cut in the bonds, so it's anything can happen. But the point that we have to run with is that the wave count in the currencies and indices have got counts that can take the market higher from that point. So, yep. Okay, well, that's about it, really. We're just looking, we understand this is our ASX 200 here, but included the SPY price here, so at 4,200 here. So it is sluggish going to the upside there, where the other markets have been making new highs here. We will be looking for 5 waves up through here to take out this high here, and we'll be looking at the 43.50 or the 43.72 as possibles there. We will start taking this wave count up here more seriously after we get through the Monday morning Dow futures opening, so we'll know where we are, and also the summit as well, because anyway we can't trade before that anyway, and we just need to allow that to unfold. So I will be writing some information on the site once I get a grip on the Dow futures on the Sunday night and currencies on the New Zealand Open. So that's about it. So we've got this sort of bullish picture that we started to talk about on the Friday, and that's following through there now. And if that's going to be the case, we'll cut our little short positions in the on the local ASX, and they all should be at break-even point now anyway. We've been harping on about that, and we'll sort of flip to the long side on things, and we may even have a longer term long trend coming up as well. So we'll look for that, but we want to get support on these higher numbers here, and also just in terms of the levels that you know that the 4,000 here is the medium level, then the 4.1, 4.2 and 4.3 are the minor group levels, so that's all minor group 1, and you know that with any group 1, be it a minor group 1 or subgroup 1, if support is found on top of the 4,300, then, which is the top of group 1, then we can move from there. But trading above the 4,300 is not support. The breakout is important as part of the process, but the retest coming back is more important than the breakout, and we'll be looking for a corrective pattern as a retest in confirming that we actually have the right support there. Because we get the right support there, then we'll be looking at the 4.5 at that stage there, and obviously that's where the more supply comes in as well. So but one step at a time, one level at a time, and away we go. So we're on track with everything, and we're navigating through it quite well. We've just got to get through this Monday's news event, and we'll be gaining positions on the right side at the right time. So cheers. Alrighty, well, good morning and good luck, and look in the ASX day trading section for any comments once we can assess the Dow futures opening and the currency markets opening on the Sunday Monday morning, and we'll pick up the thread and trade from that point. All right, cheers.